Hello and good day. This is the daily analysis of the S&P 500, NASDAQ, and Dow Jones indices for January 28th. After stabilizing above the 6,940 level, the price entered a bullish phase and eventually moved toward the rejection block area. It continued its movement, closing above the 50% level of the rejection block, which suggested a further upward move was likely. And with a bullish displacement move, it collected the buy-side liquidity and ultimately closed above this level. My prediction is that the price will have a short-term correction to the downside. It may enter the order block area or the FVG zone down to the 6,942 level. Ultimately, in this section, by identifying a reversal in the downtrend, we can enter a buy position within the market's momentum. Also, at the 50 level, the price could have a strong reaction and then enter a bullish phase. By analyzing the 1-hour time frame, we see that the price is moving within a bullish channel, and, currently, it is forming a short-term downward correction and moving toward the sell-side level. The liquidity at the 7,004 level is moving, and it could be rejected from the FVG zone located below the sell-side level and move upward. Also, if the trend line closes below to the downside, in case of a pullback and identification of weakness in the trend, we can use this opportunity to enter a sell position targeting the edge of the FVG at the 6,941 level, set our target at this area, and again, if weakness is identified in the downward trend, use this opportunity to enter a buy position. Place the stop loss behind the FVG area at the 6,920 level or the swing low at the 6,892 level. Set our target at the 7,003 level, or adjust it according to a risk-reward ratio of 1:1, 1:2, or 1:3 by reviewing the 15-minute time frame. We can see that the price made a strong, aggressive move upward. It collected the buy-side liquidity and formed a Ryan Soldier strategy, where, with the price moving upward, the buy-side liquidity of the IRC candle was collected and absorbed. The candle closed, confirming the Ryan Soldier strategy with the close of the next candle, and we could have used this opportunity to enter a sell position. We set the stop loss behind the swings at the 7,016 level and target the FVG zone, which is the 6,992 level, since we anticipate the price will move downward. It collects the sell-side liquidity at 6,999 and 6,995 and then reacts within the FVG zone. Also, if the price manages to close above the 7,016 level and stabilizes above this level, it can continue its bullish trend. By analyzing the 4-hour time frame of the NASDAQ index, we can see that the index is currently within a rejection block, but it has not managed to confirm the price above the 50% level. This order block has not been validated and has closed below the zone, which suggests that the price may experience a short-term decline. It may move downward for a while and enter an FVG zone, and if a reversal trend is identified, in a bearish scenario, we can use this opportunity to enter a buy position in the market by applying a trading strategy. By analyzing the RSI indicator, we can see that it is in a high potential zone where the RSI, the 7 and 14 periods are within the high potential and overbought zone, which indicates the continuation of the trend. There is profit in the market, and it can only experience a short-term correction. If the price turns bearish and breaks the FVG zone and the price closes below the 26,006 level, the price could enter the FVG zone, and if it closes and breaks below the FVG zone, lower price levels like 25,788 and 25,702 could be reached. These could be the next price targets based on the analysis of the 1-hour time frame for the NASDAQ index. We can see that the price is forming higher highs and higher lows, and ERC candles have formed in this section. By analyzing the RSI indicator, we can see that it is in a downward trend, and if the RSI moves downward, makes a pullback upward, but fails to reach the overbought zone, it could enter a bearish phase. However, if it manages to reach the overbought zone or the high potential area again, it can continue its bullish trend, which includes two 4-hour FVG zones that have been refined to the 1-hour time frame. At the 26,043 level and a rejection block at the 25,887 level, there are highly significant targets for the continuation of the bullish trend in the market. By analyzing the 15-minute time frame of the NASDAQ index, we can see that the price has moved upward. And during the London session, there was a pullback to the high of the Asian session, which is anticipated. If the bearish momentum increases, it could move downward and enter an FVG zone, a 4-hour zone that has been refined to the 1-hour and 15-minute time frames, and after entering this area, it could then move upward from there. On the other hand, if the bearish momentum decreases and it enters a bullish phase, the price could target higher highs, which is not unlikely. Dow Jones. We can see that the price is currently within a range-bound area. It is expected to experience a short-term slide to the downside. If the price forms a lower low within a pin bar candle, or forms an inside bar with the next candle, a second strategy is confirmed, and we can use this opportunity to enter a buy position. Set the stop loss behind the swing level at 48,717. Target the swing highs at levels 49,517, 49,653, and finally the liquidity level at 496,828. If the price moves downward, it collects liquidity towards the sell side and closes within the range. A bullish engulfing strategy is formed, and we can also use this opportunity to enter a buy position. With the price closing within the range and the formation of a bullish candle as confirmation, we can enter a buy position and set the stop loss behind the swing. And we can set our target based on a risk-reward ratio of 1:1, 1:2, or the swing highs at higher levels. By analyzing the 1-hour time frame of the Dow Jones index, we can see that the price is currently in a consolidation range and is forming liquidity, both buy-side and sell-side. This is present in the market, which could lead to a short-term correction to the downside, and by examining the RSI, we can see that the price has entered a high potential zone. There was a brief period of short-term price correction, and a notable positive divergence has formed in this section, which suggests that it might move downward toward the support level. It could potentially enter the designated zone, and then experience a strong rejection from this area before it moves upward once again. Within this designated time frame, 15 minutes. During the Asian session, the price had an accumulation move. In the London session, it remained within the Asian session's range, and it is expected that in the New York session, we will see a distribution move. Currently, the price is in a bearish phase, which could potentially collect liquidity towards the sell side, enter the rejection block area, and attempt to identify the next trend direction. If it approaches the rejection block area, we can look for buy positions in the market. Stops should be placed below the area at the 48,875 level. Set the target at the upper boundary of the rejection block area, at the 49,143 level, or the swings around 49,192.4. If the price moves upward and quickly absorbs the buy-side liquidity within the area, and we see a rejection block forming in the bullish trend, we can use this opportunity to enter a sell position. Place the stop loss behind the area, targeting the lower part of the bullish rejection block at the 48,943 level. Music. Wishing you success and profits.